Big housing news out of Washington today, with President Trump proposing that the U.S. should ban large institutional investors from buying single-family homes. This argument is simple. When large funds buy homes in bulk, it reduces supply for everyday buyers, therefore pushing prices higher. There's no question that institutional ownership in single-family rentals has grown significantly over the past decade. But here's where the conversation needs to be more honest. Housing affordability didn't break because of investors alone. Inflation, years of underbuilding, zoning constraints, and rising financing costs are all catalysts to the bigger issue here. Institutional buyers stepped into a market that really already had structural shortages. If large investors are suddenly restricted, it's not that prices do not automatically fall. In fact, we could potentially see tighter rental supply, higher rents, and less capital flowing into housing development, especially at a time when the U.S. already is in a housing deficit. As far as the market volatility this morning, the reaction was almost immediate, with shares of Invitational Homes, Blackstone, and Apollo all selling off on the news, indicative that this isn't just a housing story, but one of capital markets. The real question is not whether people or corporations should own homes. The real question behind the scenes is how we increase supply without distorting incentives or creating new problems downstream. Housing supply is never as simple as banning one group of buyers, and the unintended consequences are usually where the real impacts show up. Time will tell.